What's up, YouTube? It's your boy, Willie Nunnery Jr. with Cedar Property Solutions, baby. I'm coming with y'all back with another video, man. Man, y'all gotta really gotta work with me, bro. I just got finished working out, and I just got finished going hard with these push-ups, you know what I'm saying? I'm tired, bro. I ain't gonna sit up here and stunt with y'all, but I'm still coming with enough energy to give y'all a good video. I got a good lesson planned up. This is what we're gonna talk about tonight. What is hard money? I know y'all heard about hard money loans in real estate in general, not just commercial real estate, but also residential real estate too, because they use them a lot too. So that's what I'm gonna talk to y'all about. Hard money loans, what is it? These are the key things these are the key things we're gonna be breaking down tonight for y'all. Okay. What is a hard money loan and how can you use it to invest in commercial real estate? How do a hard money loan differ from a conventional loan? We're gonna break that down. You know what I'm saying? I'm gonna give y'all a comparison on a conventional loan versus a hard money loan. Show y'all the difference between the two. It's a huge difference. You know what I'm saying? It's a big difference between the two of them. And I'm gonna talk about the cost of hard money. How much that shit costs. You better hold on because it's a nice little bit of money. Four most common questions you're gonna talk about for the hard money loan. The four most common questions. You know, so let's dive right into it. What is a hard money loan? A hard money loan is basically a loan backed by a hard asset. What is this hard asset? The property that you're borrowing against. That is the hard asset. Basically, when you go borrow them people money, the property that you borrowing against is the asset, is the hard asset. So basically, if you mess up with their money, the property is collateral. Hence, that's why they call it hard money, because the money is backed by a hard asset, the property that you borrowed against. All right. How do a hard money loan differ from a conventional loan? I could explain this, but I'm gonna pull out my whiteboard and I'm gonna break it down for you on my whiteboard. So give me a second. Let me pull out my whiteboard. Hold on. All right, man. What's up, baby? Like I told y'all to come back. Had to put everything on my whiteboard to break it down for y'all, you dig? So we're going to go from the left to the right. On the left is the conventional side. On the right is the hard money loan side. We're going to break these down. Conventional loans versus a hard money loan. All right, starting off with the conventional loan, y'all. With the conventional loan, you can see that the interest rates are 3.5% to 6.5% on a conventional loan. Your hard money loan, the interest rate can start at 8% to 14%. That's a lot. That's a lot, dog. You know what I'm saying? Your upfront cost for a hard money loan is going to be 1%. Back up a little bit so I get a little focus. It's the whole board. So your upfront cost for your hard money loans will be 1%. That 1% is generally going to go to the lender for that's the money that they're gonna take up front to originate the loan. You're gonna pay a 1% cost for that. The hard money loan side, your upfront cost could be 2% to 5% of the loan amount. What they mean by the loan amount is if you got a loan for like $1 million, you're gonna be paying 2 to 5% of that loan, versus on the conventional side you're gonna be paying 1%. Big difference. Okay, let's see. LTV, up to 80% of the loan on a conventional loan. LTV means loan to value. That means you could borrow up to 80% of the loan. That means you got to put down 20%, and in the conventional loan, they will leverage you to 80%. Follow me so far? Let's go. Hard money loan, up the LTV, up to 70%. That is huge. So that means you got to put down 30%. That's big, dog. That's big. That's big ball money. Okay. The borrower's credit for the commercial loan, for the conventional loan, is important. They're going to look at your credit. For the borrower's credit, for the hard money loan, not important. The closing for the conventional loan is going to take you about 45 to 60 days. Closing for the hard money loan is going to take you about 1 to 3 weeks. And I forgot about the terms. The terms on the hard money loan is going to be about 6 to 18 months. So it's a very short loan. It's a very in and out type thing. It's not loan you're going to keep for long term. Okay. The sources of the conventional loan, the sources of that money is going to come from an institution like a bank, JP Chase, Morgan, Wells Fargo, Capital One. You get the deal. Okay, the sources of the hard money loan is going to come from individuals, regular everyday people, putting money into an account, lending it out to somebody else. Stay tuned, I got more for y'all. All right, now y'all, now be back. Now we're going to talk about how expensive hard money loans are. This is going to blow your mind. You know what I'm saying? Let's go over it. Hard money loans are expensive, and that's why they can't be used on an average deal. Let's say you borrowed $500,000. A conventional loan is going to cost you, a conventional loan is going to be $500,000 at 5% for 30 years. It's going to be $2,684,000 a month. A hard money loan is going to cost you $500,000. A hard money loan for $500,000 at 12%, you heard me? It's going to be $5,000 a month. So make sure you be ready for that. Make sure you have a solid game plan to cover that kind of debt, because that is serious business. Stay tuned. Now, there's some more fees y'all got to pay around. As if the other example, the $500,000 example, wasn't enough. There's some other stuff you have to pay that you're going to have to consider budgeting into your deal too as well. Underwriting fees is a flat dollar fee, typically between $750 and $2,500. That's going to be charged on a hard money loan depending on the deal. So depending on how complex the deal is, you could pay between $750 to $2,500. You're going to have a processing fee, a flat dollar fee charged for processing a loan. You're going to have a doc fee, a flat cost for preparation of the loan documents. You're going to have to pay for an appraisal fee. You're going to have to pay the borrowers. You're going to have to pay for the borrower's title work. And you're going to have 6 to 12 months worth of property insurance already, because they're not going to give you all this money and you don't have no insurance and something happens, a hurricane or a flood or something like that happens, and they asked out, they can't get their money. That's not going to happen. And you got to have at least 12 months worth of property taxes already stashed away. That's a lot of money you got to come up with to the table for a high-ass loan. All right, y'all, we about to wrap it up. I'm about to wrap it up with fix my camera. Shit. All right. I'm about to wrap it up, y'all, with 4 common questions people always ask when it comes down to getting a hard money loan. All right. Number 1, does your credit score matter? Maybe. Maybe it do. You know what I'm saying? But this is what hard money lenders are really looking for. They're not looking for, per se, a credit score. What they're looking for is if they had foreclosures. They're looking for if you had any bankruptcies, any type of collections or anything like that. You know what I'm saying? Like, that's what they're looking for. Any type of ability you have not to pay back. That's what they're looking for. So if you have anything like that, foreclosures, bankruptcies, any type of collections of fees, 9 times out of 10, they ain't gonna want to deal with you. You know, they ain't gonna want to rock with you around. 9 times out of 10. Do you need to put money down? Yes. This is not hard money loans. It's not no money down type situation. You're gonna have to put money down. You know what I'm saying? And most likely it's probably gonna be a lot. All right. Number 3. How do hard money lenders underwrite their deals? Very good question. Very good question. First of all, they look at the deal and its potential. You know what I'm saying? They look strictly at the deal. They look at the deal and see like it's the potential to make good money on this deal versus like, is this a horrible deal? Because they're not going to loan on just a shitty deal. You know what I'm saying? Just be straight up with you around. Like, they're not going to just give you money just because you think it's a good deal. They have to think it's a good deal. So it really is comparable to how good of a deal you have. If they gonna make some, if they look at the deal and say like they're gonna make some money off it, they gonna give it to you, straight up. What is the secret to getting my deal approved? What is the secret? The secret is having a very good exit strategy. If you could tell them in detail how they're gonna get their money back and break it down into phases. Okay, phase 1, I'm gonna do this. I'm gonna take the money and I'm gonna renovate. Phase 2, I'm gonna take the money and I'm gonna do landscaping. Phase 3, I'm gonna take the money and do the roof. And then by when the roof gets done, I'm gonna start adding in tenants. And once I start adding in tenants, I'm gonna look into refinance and I'm gonna pay y'all back y'all money at the end of it. That's gonna give them, make them more comfortable. Like, okay, this guy knows what he's doing. You know what I'm saying? He broke it down into phases to actually how we could get our money done. He broke it down actually the phase of what he gonna do with our money. And then he has a detailed plan about how we could get our money back. That makes them more comfortable into giving you the money. So there it is, y'all, man. I hope y'all enjoyed this video. I took a lot of time out in doing it. You know what I'm saying? And putting this together. Make sure y'all like, comment, and subscribe to the channel. Like I said, I got more videos to come. Stay tuned because I got we went to parade today as a family. We went to parade today. So I got some clips of that too I'm going to add in. So y'all be cool, man. Make sure y'all like, comment, and subscribe to the channel, baby. We blowing up. Happy Mardi Gras 2023. Enjoy the view.